Hello traders and welcome to another video review. Today is Wednesday, the last day of the July 2024. Let's take a look at the economic calendar for today. Overnight data were in form of the manufacturing PMI from the China that was in line with expectations, 49.4. We got the Bank of Japan press conference and the Bank of Japan interest rate decision. Let me just switch to the medium important data, because as you can see I got only high important data today. So basically yes, the press conference and retail sales and the industrial production from the Japan were released, and we got of course the interest rate decision from the Bank of Japan together with the monetary policy statement and the outlook report. The Bank of Japan hiked the interest rate from 0.1% to 0.25, basically, which means they think that the inflation has peaked and there is a time for the interest rate hike. That's the information from the overnight, the most important information overnight. And if we switch to the high event for today, of course, we got the CPI data from the Eurozone scheduled for release at 11 o'clock. The market participants expect the CPI to stay at the level of 2.4%. ADP Nonfarm employment change, 2:15. Data from the US, pending home sales at scheduled for release at 4 o'clock. Crude oil inventories scheduled for release at 4:30, and then at 8 o'clock we got the major event of this year, major event of this quarter, major event of this month, Fed interest rate decision statement, and 30 minutes later there is a press conference. The market participants expect Fed to stay hawkish and keep the interest rate at the level of 5.5%, but because of the recent decision of the Bank of Japan, the situation might be even more hawkish, and if the Fed has this under the control and the inflation expectations are not that high anymore, they might hike 0.25% or even 0.5% today. In that situation, if they hike, we are going to see some kind of a major sell-off across the various markets. However, on the other side, if the Fed stays dovish, which means that they either cut a little bit, like 0.10% or 0.15% or 0.25%, or even more, that's still possible, then of course we will see a massive sell-off, especially in the SP500 American markets. There will be rotation from the tech stocks to different stocks, and of course the gold will go lower, and the US dollar will basically go higher. So let's just see what are the major let's say scenarios for the FOMC interest rate decision right now. This is the 4-hour chart of the of the US dollar index. Let's switch to the daily so we can see the broader situation. The low was made at the end of the December 2023. So since the beginning of the 2024, the US dollar index managed to climb as high as 106.41 before the stagnation or horizontal trend has been seen on this daily time frame chart. Now, in case of the interest rate hike, the US dollar index should go lower. This area here between 104.55, 104.68, and even 105.05 should remain intact. So we shouldn't break above this level, and the market should reverse below the level of 103.60, targeting the lows from the March 8, 102.30. So that's the one of the scenarios. In case of the dovish scenario, when there is a rate cut some people expanded. The US dollar index should increase, breaking this technical supply zone and targeting 105 and even higher with ease. The ultimate technical target is 106.10 and then 106.43. So that was the US dollar index. Now we're going to the euro dollar. What will happen if the let me just go to the 4-hour chart. What will happen with this scenario? As you can see, the market is trending below the level of above the level of 50% Fibonacci retracement, but the volatility is very low as the market is positioning itself for the interest rate decision today. As I said, it's a very important interest rate decision. In case of the hawkish statement, hawkish guidance like no cut or leave or interest rate hike, or if the interest rate is left at the same level, we will see a massive spike to the upside. We should easily break above 50 or 100 periods moving average above the orange trend line, targeting at least 1.0872 or even the 10917 or even the swing high. That's completely possible. However, if there's a dovish stance, so that means that actually the Fed will hint in the forward guidance a rate cut in September, or they will cut during today's meeting. The massive sell-off will happen, breaking with ease the major technical support at 1.0788, targeting with ease 1.0714 or even the lows of the 10670, creating the further sell-off on the US dollar index. And then, of course, the master target will be the 1.0605 level, the low from the 16 April 2024. So that's completely different market reaction. Let's now take a look at the US dollar to Japanese yen, because we are after the interest rate decision. As you can see, the level of 151.95 is still being tested by the market participants. So in that situation, of course, we can say that this is a very nice level for the bulls, because it's been tested so many times that there is no problem identifying it. It looks like this level here is not really working, the 152.87, because the market doesn't react on this, so which is why I will move this level here. And now we got very nice zones of the technical resistance on this market. So we are after the interest rate decision. As you can see on the US dollar to Japanese yen, remember there was a hike from 0.1 to 0.25, and that resulted in a massive sell-off just a few hours ago. Right now the market found support at 151.95, but it looks like the bulls wants to go even lower. So let me just zoom out again. If they will break below this level here, that will be very bad for the bulls, because after this technical support there's virtually almost nothing until, let's say, 150.70. Let me just mark this level. Roughly around this 150.78 maybe. Okay, so that's the next technical support, but it's not like a major technical support. Is located way lower at the level of 146.50, and that will be the target for the bears if they will get the interest rate. I mean, further helping hand from the FOMC, from the Fed basically, and FOMC committee. All right, so that's the situation with the US dollar with the Japanese yen. It shouldn't rally that much, even if there is some sort of the bearish interest rate decision by the Fed. So that shouldn't help that much. Gold market. Okay, gold and S&P 500 left. Gold market didn't break to the upside, so we can it looks like we got 1, 2, 3, 4, 5 waves to the upside, and then we got the low at the level of 2,352, and now we got A, B, and C to the upside back on, made back on again. So it looks like the bulls are in temporary control of the market. So that's the situation here, and you of course will be trading just ahead of the FOMC decision and the event just below 2,300 and 2,431 level. So please keep an eye on this level. But from the there is one more technical resistance. I need to apply it. There you go, 2,451. But because there is like a, it looks like a 5-wave impulsive decline. So from this level here we got 1, 2, 3, 4 and 5 waves to the downside. And now what do we have here is ABC to the upside. It all looks like the market is positioning itself through the decline, impulsive decline. So if there is no hint from the Fed about September's rate hike, or if cut, or if there's no cut today, the market should go, gold should go lower, and S&P 500 should go higher. Let's just switch to the S&P 500 now. The last but not least, S&P 500. As you can see, ABC to the downside has been completed, but the market movement to the upside has been capped by 5,494, and the market has been seen moving down recently because plenty of the major tech stocks are being sold. Now, if there is a hike, then the market will continue the movement to the downside. There will be a different bigger sell-off, and our ABC correction would evolve into the 1, 2, 3, 4, 5 impulsive cycle. What I mean is this this impulsive cycle to the downside, unfortunately, which means that we are starting to create some bigger decline that might last longer. And that's the wave 1, 2, 3, 4, 5. So wave 3 would be somewhere here, then wave 4, and then wave 5. So that's in the case of the interest rate decision of the Fed. Of course, that decision is if there is a kind of a hike. If there is no hike, or if there is a cut, or if there is a hint in forward guidance that there might be a cut in September, the market will rally. The market will rally, so the ABC will be completed here, and then we will go higher towards the all-time highs at 5,669 without any problem. So all of this recent movements to the downside from the major tech stocks should be erased. And last but not least, let's take a look at the Bitcoin. Of course, what is Bitcoin doing these days? This is the 4-hour time frame chart. We are still testing this trend line here, waiting for the interest rate decision that will affect the Bitcoin, especially dominated with the US dollars. Right now, we are sitting on the trend line. We are sitting on the 100 periods moving average into the negative momentum. So any trigger for the bears is needed to spike down towards 63,401 dollar, where the major technical support is being located. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care. Don't forget about the Fed interest rate decision today, and have fun. Bye bye.